Let me tell you something that your parents never told you. Your school never taught you. And your employer absolutely does not want you to know. There is a number. A small, almost embarrassingly small number. That if you commit to it every single month, starting today, could make you a millionaire. And that number is $100. That's it. Not $10,000, not $5,000, not even $1,000. $100 a month. The price of a few dinners out. The price of 2 months of a streaming subscription. The price of shoes you bought last month and already forgot about. But here's the part that will either excite you or haunt you for the rest of your life. Every single month you wait is costing you thousands of dollars you will never, ever get back. Stay with me, because what I'm about to show you today, most Americans will go their entire lives never knowing. Welcome back to Key Finance, the channel where we break down real money strategies for everyday Americans. No fluff. No gimmicks. No get-rich-quick nonsense. Just the truth about how money actually works. If this is your first time here, you're in exactly the right place. Hit subscribe because we post every week, and trust me, you don't want to miss what's coming. Now, let's talk about the most powerful financial tool available to you right now. I want you to imagine 2 people, same age, both 25 years old. Same income, same neighborhood, same starting point in life. We'll call them Jordan and Marcus. Jordan opens his laptop one Tuesday night. He reads one article about investing. He opens a Roth IRA account. He sets up a $100 automatic transfer every single month. And then he forgets about it. He doesn't watch the market obsessively. He doesn't panic when stocks drop. He just lets it run. Marcus? Marcus keeps saying he'll start investing. When I get a raise. When I pay off my credit card. When things settle down a little. 20 years pass. Jordan's $100 a month, with an average 10% annual market return, has quietly, silently, invisibly grown into $75,000, without Jordan doing a single thing after that first Tuesday night. Marcus has invested exactly $0. And here's the gut punch. If both of them continue from age 45 to 65, Jordan reaches $650,000. Marcus starts late at 45, invests the same $100 a month. He ends up with only $76,000. Same money, same amount, a $574,000 difference. The only thing that separated them? Time. This is the secret nobody teaches you in school. This is what the wealthy understand that most Americans never grasp. It's not about how much you invest. It's about how early you start. Now, you might be sitting there thinking, okay, but where do I put this $100? Great question. And the answer is simpler than you've been led to believe. There are 2 accounts every American should know about. Number 1, the Roth IRA. This is hands down one of the most powerful wealth-building tools ever created for regular Americans. Here's why it's almost unfair. You invest money that's already been taxed, your normal take-home pay. That money grows in the market for decades.
And when you retire and pull it out, 0 taxes. Not a penny to the IRS. Let that sink in. You could have $600,000 sitting in a Roth IRA, and the government cannot touch a single dollar of growth. The 2026 contribution limit is $7,000 a year. That's about $583 a month. But starting with $100, absolutely valid, absolutely powerful. If your employer offers a match, even a partial one, and you are not contributing enough to get that full match, you are leaving free money on the table. That is not a figure of speech. That is literally free money your employer is handing you and you are walking away from it. A 50% match on your first 6% of salary is essentially a guaranteed 50% return on your investment before the market even does anything. No hedge fund in the world can promise you that. All right, let's get specific. Here is exactly what investing $100 a month looks like, step by step. Step 1, open a Roth IRA. If you don't have one, open one this week. Not next month, this week. The best platforms for beginners are Fidelity, Charles Schwab, or Vanguard. All free to open, all beginner friendly. Step 2, invest in a low-cost index fund. Specifically, put your $100 into VOO or FSKAX or SWTSX. These funds track the entire US stock market, or the S&P 500. They have expense ratios as low as 0.03%. That means for every $10,000 you invest, you pay $3 a year in fees. $3. Meanwhile, other funds charge 20, 50, even 100 times more than that. The fee difference alone over 3 years can cost you tens of thousands of dollars. Step 3, automate it. Set up automatic investing on the first of every month. $100 leaves your account, goes straight to your Roth IRA, buys your index fund. You never see it, you never miss it, and you never make an emotional decision about it. This is called paying yourself first.
And it is the single most important habit of every wealthy person I have ever studied. Step 4, never stop, never panic. The market will drop. It always does. 2008, it crashed 50%. 2020, it dropped 34% in 33 days. 2022, brutal year for almost every investor. But here is what every single one of those crashes has in common. The market recovered. Every single time. And the people who kept investing during the crash, who kept sending their $100 every month, they bought shares at a massive discount. And when the market recovered, which it always did, they came out wealthier than before. The ones who stopped, who panicked, who pulled out, they locked in their losses and missed the recovery. Discipline beats intelligence in investing. Every single time. Let me show you exactly what this looks like in real numbers. $100 a month. 10% average annual return, which is the historical S&P 500 average. At 10 years, your $12,000 invested becomes $20,484. At 20 years, your $24,000 invested becomes $75,937. At 30 years, your $36,000 invested becomes $226,049. At 40 years, your $48,000 becomes $637,678. You invested $48,000 of your own money across 40 years. The market handed you back over $637,000. That is the power of compound interest. Einstein reportedly called it the eighth wonder of the world. He said, "He who understands it owns it. He who doesn't pays it." And right now, most Americans are on the wrong side of that equation. They're paying compound interest on credit cards and car loans, while the wealthy are quietly earning compound interest in index funds. The gap between those two groups gets wider every single year. Here's one more thing I want to leave you with. Most financial experts agree that to retire comfortably in America,
You need approximately 25 times your annual expenses saved and invested. If you spend $40,000 a year to live, your retirement number is $1 million. If you spend $50,000 a year, your number is $1,250,000. Sounds impossible, right? It's not. $300 a month, 3 times what we've been talking about, started at age 25, grows to over $1.9 million by age 65. The only question is, When are you going to start? Here's the truth I need you to hear. You don't need to be rich to start investing. You need to start investing to become rich. $100 a month, a Roth IRA, a low-cost index fund, automation, and time. That's the entire strategy. No secret, no complexity, no Wall Street insider access required. Just consistency and the decision to start today instead of tomorrow.
Because tomorrow always becomes next month. Next month always becomes next year. And next year always becomes, I wish I had started earlier. Don't be Marcus. Be Jordan. If this video helped you see money differently, please hit that like button right now. It takes 1 second and it helps this channel reach more Americans who need this information. Subscribe, because next week we're covering the 5 biggest investing mistakes beginners make and how to avoid every single one. And drop in the comments, how old are you? And when are you starting your $100 a month? I want to hear from you. I read every comment. See you next week. Stay smart with your money. Watch this next. S&P 500 versus ETFs. Which one actually makes you rich?